Hey traders, this is your daily market recap from Christian Farmers at Tribeca Trade Group. And today is Wednesday, November 20th. Interesting, only about a week and a half to go for the month. And that's it. We're going to be in December, last month of the trading year already. So, where do we finish today? SPY's down 37 basis points. So, not even down a half a percent. Damage really not that bad today. Q's down a little bit more than a half a percent, so 60 basis points. Small caps right where the SPYs finished, just fractionally down 38 basis points. So again, less than a half percent. So really not that much. We kind of got hit with some headlines, some the usual trade headlines. We're getting some positive, some negative, but probably a little bit of an excuse for the market to come in a little bit, right? We've been, I would say, pretty much priced to perfection the last 2 weeks. Just looking at obviously how far we've gone in the last few weeks. SPY has remained overbought. We've talked about things the last couple days, even the last week about market breadth being on the crappy side, right? We kind of lost full market participation, sometime last week, and it just really hasn't been, a powerful grind higher, right? There's been some warning signs along the way. That was basically, if you kind of listen to me the last couple days, you can go back in my videos, but that's why I put on a SPX hedge. I went ahead and took profits on that today. These $10 wide put spreads, which is sometimes how I play it, it's tough to kind of sit with that trade even though it was perfectly in the money and through both sides of my strikes on that. I have to, for that to realize the full amount of money, I have to wait all the way till Friday, and that's tough to do because the way this market is, sometimes it rebounds very quickly. So I took one target, and then I basically I was trying to get this is a $10 wide put spread, so I was looking for like 6 or 7. Unfortunately, the market just wasn't going to give me that, and I took off the rest. Basically here, right around the same. So that's right around a double, right, for a hedge. That's perfect. Again, I would have liked to get a little bit more, considering where I think the SPX was below 3,100 there for a little bit. But the way that this market goes, if it rallies back, then your hedge goes out expired. So I did decide to take that trade off. But again, just kind of reading the tea leaves a little bit and going through the homework, going through the internals of the market kind of helped reveal that a little bit. So where are we now, right? So let's just fast forward to an S&P chart, and then I'll talk about sector performance and what was moving. But you have a hammer bar up here. So some people talking about how now, if you look at S&P futures, how I do, there's really no gaps, right? But I know some people, they like to say, they like to look for these gaps and say, oh, we filled this gap, which we did. So you could say that if you're looking at SPY or SPX, when it's just basically will give you the reason why there's no gaps in the S&P futures is because they're open longer, right? It's more continuous. Now they do close for a little bit after 4 o'clock, but it trades through the overnight market, right? So SPY doesn't, right? SPY is the cash close, right? So 9:30 till 4 o'clock. But in any event, long story short, is this one gap is filled, which some technicians are like, oh, good, that needed to happen. So gap fill on that. So where does this leave us? We did basically, you could see the 5-day moving average. One of the things that I've been looking at for the last couple weeks, I keep saying that the 5 period moving average, price is basically right there. I would not be surprised, and that's why I didn't go crazy like with today's dip, because I wouldn't be surprised if we kind of come in a little bit further. I think we're still decently above this 20-day moving average. I think also, keep in mind next week, right, and we've only got 2 more days of the week, but next week. Oh, interesting. I guess Uber CEO bought some shares. There was a call buyer in that name today. Huh. See how that works. but next, right, we only have 2 more days of the week, and then next week we have a shortened week, right? We're closed for Thanksgiving, and then it's a half day afterwards. That's typically like a, and I don't like seasonality isn't always on the top of my list, but just looking at where this market is, it's generally kind of a weak seasonal uh, week, basically the week of Thanksgiving. So you kind of just have that in the back of your mind and to help you a little bit with some decision making, right? And that's basically what these things do. Like the more things that you look at, right, you can kind of weigh them and decide, what are you going to do with your portfolio? How are you going to trade when you look at a number of factors, which I do. So so that's the S&P. Really, what has been strong, and I'm going to bring up this chart next, has been bonds over the last week. Let's see, how much are bonds up this week? What do we get? We got a headline too. LVMH and Tiffany are said to be in discussions. I thought they were already in discussions, but that should maybe they denied it a couple of weeks back. I'm not sure, but that headline just rolled across the tape. So TLT, what is TLT up for this week? Let's see. Let's go back and whoops, TLT. So if we just want to see basically a week ago, let's go back to last Tuesday, which is 11/12/2019. Yeah, it's up about 3.7% TLT, so up another 1. I mean, that's a decent move for bonds in a week. Now, the one thing to note here is, there's a lot of implications when yields go. Remember how this works with TLT. As price goes up, the price of bonds go up. Yields go down. So yields have been going lower this week. So what becomes less, right, when the yield curve starts to flatten, which it's been doing this week, that's basically not so great for banks. There are some areas that it's better for, like your yield plays again, right, like XLU, right, has been rallying back this week after breaking the 50-day moving average. It's going to be hitting some resistance here, which you can see it got rejected here. So banks, which we really haven't heard too much about the banks over the last week. They've kind of been digesting after a nice run, and then home builders. I'm going to talk about the home builders in a minute, right? So they're on the cusp of taking that next leg higher. Lower rates, good for your refinancing, home purchases, and yeah, basically, and home lines of credit and so forth as interest rates go lower this week. So I think that's interesting. The other thing with the TLT chart to kind of watch, right? Here was your high. It made a lower high here. It made another lower high here. We're close to taking this out. But if this turns back, then it's basically another lower high. So we don't know that yet. Again, they basically closed on the highs just like they did yesterday. So this is gappy looking, by the way, if you want to use that. And ZB is a little bit different. It's because it's longer dated. This is 30-year, and TLT is a combination of longer term bonds. But you can see how that looks as well, up to the 50-day moving average. But basically, same point. So far, a lower high. We don't know if that's going to change trend right now. All right, so I think important to cover because that is really what's been moving this week, or that's what's had some strength. The rest of the performance, you can see the VIX fell today. Kind of looked like this. A little bit of hockey stick-ish going on for a little bit until that trade headline kind of wore off. There was a rebuttal of that, I think, but you could see we kind of peaked out here at 14.17, and then we actually finished lower than where we were when this initial headline started. So, just interesting to that. It also kind of tells you that there's buyers in this market too. Oil, which I don't really have on my spreadsheet, but oil made a decent move today. I don't have any oil exposure, but pretty close to a bullish engulfing candle. I would say you could kind of cheat and say that's a bullish engulfing candle, right? This normally that would be the candle covering the whole thing here, but I started to look, right. We talked about, I think in last night's video, just how poor. I mean, this thing XOP was only up 0.5%. I think OIH was the best out of the group, up 1.6%. Still didn't close on the highs, but maybe a little bit of a relief bounce. I think one of these names got an upgrade. SLB, I think it was today. Nice move there if you caught that one, up 5.3%. I did not. I did not mess with that one. What else? IWM. I was surprised. This was down, I think, at 1.1% today. So still holding in here. I do have a trade on this one. What I did was I did a little bit of management with this one. I had a call spread in the RUT, right, which is the underlying index of IWM. It is not where it was. I talked a little bit about IWM in yesterday's video, talking about I think how it kind of closed in here and held the top of value. Well, we're back inside value. I do think it's interesting that we did not go lower. I was talking about all these virgin point of controls. So again, I would keep an eye on IWM tomorrow. There was a little bit of call buying on the lows of the day. We did see that in IWM. So apparently somebody liked it. But you could see, where was this one? Not this one. I think it was this one that caught my eye. This was around just before 2 o'clock Eastern. December 164 calls. A nice size little trade for a December position. $330,000 in premium opening trade there in that one. So again, 159. This is on the 1 hour. 158.07. The only thing I forgot to mention is how well the value areas really help. When we start to get a sell-off, we've kind of talked about how far we were above value for in the beginning of the week, Monday and Tuesday. So we came back and check this out, right? I mean, that's the top of value. That's in the note that I send out members every morning. Some levels to watch. 3097 where we bounced. So that's for S&P. Also interesting that 3097 and a half. If you look at this on the 5-minute, guess what? There was a VPOC taken out on the downside. I mean, I didn't put this out on Twitter because I think sometimes people think I like draw these things in or something because it's so exact, it's ridiculous. But this was, again, virgin point of control, right? Because people ask me on this on Twitter all the time what this means, right? It's basically it's very similar to like a gap, right? Price never touched this point of control. For the most part, when you start this is a 5-minute chart, but when you start a new period, for the most price usually goes through and touches, like takes out the point of control for the day. Like here it was passed through, price passed through it here. Price did not pass through it last week, so there's a virgin point of control up here, right? See how price never went through this at all. So this is what happened back here, right? And again, for whatever reason, price just seems to remember when there is a decent amount of a place where buyers and sellers have met up and it hasn't been revisited. It just when you start trading out of range, price has a memory and it seeks out where there was a lot of buyers and sellers, right? That's a point of control, by the way. Point of control is your highest level of volume in a period. And we use this in a mathematical formula to get this. But yeah, especially so, and a virgin point of control, right, is one that has not been touched, right? So just like we have one up here that was from last week, right? We went all the way through. Oh, sorry, this is this week. This is this value. Sorry, this value area is based on last week, the previous week's. I'm sorry, I'm on the 5-minute. So this is based on yesterday's value area. Sorry, let me say it one more time. So we're on the 5-minute. Today's value area was based on yesterday's price action, right? So that did leave a virgin point of control because we didn't even go through the value area at all. Forget about the point of control. Same thing with this period too. Didn't even go through this at all for that day. So again, major point there is that we took out that level, and we also bounced on support for the week, right? Now I'm back on the 1 hour. This is top of value. All right, so a lot of time spent there. I didn't even talk about sectors, but you could see that Oil services, right? Again, and energy, which has been dogged the last couple days, those bounced a little bit today. And then biotech continues to be strong. Only finished up fractionally for the day, but I thought that was really notable. Whenever you have a pullback, to see what groups come back first. Biotech doesn't even look like it had anything going on here. There is a 1 hour virgin point of control just ahead. And then if we get above that, so two levels, like if you've been trading biotech or if this is how you've been positioning, you've got one at 88.18, which is not that far ahead, almost touched there. And then for XBI, if you get above there, then we've got a pretty decent one at 91.65, right? So again, that's still $4 above, but I would wait until you get over the 1 hour one, and then possibly can set up a trade for that to go a little bit higher. All right, so that was your best performers, and then again, if you look at this list, right, you see a lot more names that were in red. Not a ton, but so maybe I shouldn't say a lot more, but I only highlight the ones that were move over a 0.5%. Software again was strong. Up again, didn't finish up huge, but up 38 basis points. Look at this chart again because this has been one of your performers. I view this as a some of these areas, right? It's kind of the playbook that we saw, a few months ago when the trade war rhetoric was heightened, right? We noticed that software names outperform just areas that don't have a lot of exposure to trade, right? That I refer to as hiding places. So I don't think that this is any coincidence that some of these areas that have less exposure to trade are the ones that have been, just just ripping higher like this, right? So I think that's interesting. We're almost back to 52-week highs in this one. If you go through the list of names, some of which I have on my watch list, if we get out of the sectors, there wasn't much going on in the FANG stocks. Netflix outperformed today. Apple finished down 1.1%. Remember, there was a big put buyer in Apple yesterday. So again, very overbought Apple. So you kind of expect that at this point. Roku had a big day. Roku, no trade. You can't tariff the streaming. Interesting. There was a lot of calls that went up in Roku for this week's option expiration. It doesn't look like there was a ton that were bought, but there's 20, so maybe a lot of day trading going on, but 28,000 of the 160 calls traded for this week. So again, if you look at Roku, maybe there was one or two that really stood out. This order stood out to me. That was actually the 152. That's actually in the money. But the strike that was most active today was the 160. So you could see there doesn't appear to be, just a lot of small orders. So it could be a lot of day traders in there trading Roku today, which again had a big day. And then if you move down to that software group, which I think is less trade sensitive, look at all the names. MDB had a big day. I know some people were talking about that one. I did not trade this one, but I actually traded Cadence, which just looked like a similar chart, just didn't do it. I think just a little bit unlucky here. Ended down 1.1%. I'm still in the trade, but a little bit disappointed. There's about 5 charts that look like that all look the same. Vive is another one that looks very similar to this one. Paycom, look at the move that Paycom had today, up 9%. So they've been rippy, right? This group. Twilio actually gave back. I'm still in a little bit of shop as well. Still, I think so. Shop is in value. That's the only issue there. It's not. The setup is a little bit better, I think, in Vive. But this name reports earnings. This is going to report earnings next week on the 26th. All right, so keep that in mind for that one. But if you're okay trading it short term, also ServiceNow. Still has that virgin point of control up at 290, in service now. So remember we made some money on this one with it being added to the S&P, but just looked like a good break. Again, many of these charts, just many of these names have retaken their 200-day moving average recently and have been doing a very good job since. All right, so that was the strength. A couple other things just to mention. I know some people are starting to look at credit spreads. So I use IEI because it's duration matched with HYG, which I think is the right way to look at it rather than TLT. But yeah, it's starting to move up a little bit. So credit spreads are starting to widen, but they're not at a serious issue place right now. A couple other relationship charts that I have been looking at is value versus growth. I think this has been really interesting because value hasn't done anything over the last week. You can see it's all about growth, right? In this sense, in this relationship chart, value is in the numerator and growth is in the denominator. So you could see that growth has been outperforming over the last week. So I did change. Besides, I was talking about the SPY hedge. You could see the rest of my trades today. I made a little bit of money with Caterpillar puts as well. INSEE has been a nice trade. I actually rolled some shorter term calls into January. I mentioned, I was in a little bit of a small piece of Eve I was in. Plan made some money in that in the morning. You can see I took a lot of profits in the morning. So again, ITB, I did put on a trade in ITB. I think it has a chance to break out the home builders. If I didn't mention that one, I think I did show the chart in that. And what else? I got out of Chewy today for small profits. That was not a big trade or anything like that. Call activity. I mentioned there was some Uber calls this morning. There was some PWR calls today. Go to our option channel. There it is. They were buying a little bit of Bristol Myers. I think that deal is done now. STNE saw some call spreads go up in that one. A little bit of tandem calls today. A little bit of MRVL. So a few different trades today. NTNX in the morning. But I would say some smaller stuff. It was also kind of quiet in the afternoon. Besides a little bit of IWM call buyers, there was a Diamonds call buyer. And the other thing is, so I mentioned that I did have a hedge in place also in my cash portfolio. We changed this around a little bit. I will send out a video to members a little bit later, just summing up some of those changes. This is what I did. I took targets on a whole bunch of things like Apple, that I've been long, MSCI. So I kind of just really, I'm actively managing this portfolio. I added a couple gold names, even though I don't think they did anything great today. I added Visa as well. I took out the Chinese Internet ETF, made a little bit of money in that one. So I'll have a video later. Yeah, if you guys are curious about this and you're not members, you can visit us at tribecatradegroup.com to be a member. You can get full access to that, and you can get an alert whenever I change the cash portfolio in addition to what I'm doing in options. Have a great night, everybody. See you tomorrow.